Thanks for tuning into the trade setup. I'm Neeraj Shah. It promises to be a slightly long trade setup, so bear with me, but just the quantum of news flow being so high. So first, take a look at the global markets and what they've done. Independent of what the US markets may have done last week, the fact remains that the futures are flattish to marginally lower, and therefore the global cues are not necessarily the most supportive. The other cues are okay. I mean, if you look at the 10-year yield or the dollar index, if you will, they're kind of steady at the levels that they have been. So no big changes there. But the SGX Nifty indicates a start, which is marginally in the green. And I think there are ample reasons for that to happen as well. 0.33% and not bad despite the world not being all that great, simply because there is a leg up or a tailwind of some positive news flow around index constituents at the start of the week, which is a good sign. Now, mind you, uh, per se, the index is wedged in a very tight band. It's unable to break out positively despite the banking sector stability, and you have to be mindful of that. That banks actually did reasonably okay last week, but the other sectors are not performing. IT, for example, if you look at the last line, right, it's been a sectoral index which has given a negative return for the last 1 month period, down about 5%. That weighs down a little bit on the index, if you will. And I do believe that the risk reward is not in favor of longs, but the news flow is extremely positive for index constituents today. And that could be a positive. The other piece is that when we are going lower, viewers, there is lack of selling pressure at the lower end. Market went down in the last few days or did not go up, but essentially went down a little bit because of lack of buying rather than from some active selling, and that is the key point. You're just not seeing fairly large degree of active selling either. Last week I spoke about, yeah, we can get out of this plate. Last week we spoke about how the fact that there is no large scale buying happening, the converse is also true. You're not essentially seeing very active selling, which is maybe a good thing as well. It's a very important week of results, even though today it's okay. I mean, today you have IndusInd Bank from amongst the large cap names, and then a Persistent, a Century, IIFL, etc. But the week ahead is peppered with a bunch of very important results from the finance space, from the IT space, on the mid cap end of the market, and therefore that is where I believe the interest of the week will lie. If indeed we have results specific news flow which could be conducive to the market optimism, then that is actually a good sign. And by the way, which is what we have today. So I'm jumping straight to stocks to what? Simply by virtue of the kind of results that we have in place. So Reliance Industries, I mean, the QOQ is immaterial, but the revenues are at 2,16,000 crores. The estimates were 225. But the point is on the operational front and therefore on the bottom line front, Reliance has come out with a big beat. EBITDA 38,440 crores. Estimates were 36,915. Margin 17.76. Estimates were 16.64 on for Reliance. That's a big beat on the margins. PAT at 21,327 crores. The Bloomberg estimate was 16,442 crores. So big beat on the numbers. Bunch of brokerages have given out their verdict. I thought Ruama was interesting. Jalidani, experienced hand. They've retained a buy with a target price of 3,205. They say they expect O2C to remain strong on healthy GRMs and strong petchem margins. The windfall tax removal is a positive. They've reiterated the golden refining era and the thesis thereof, yielding 10% over 10% GRM from calendar year 1024, and that is, well, an interesting observation as well. Now, just before we get to Reliance price performance, I just want to mark if there are some other brokerages that I have missed, right? So Goldman Sachs, for example, has a buy with a target price of 2890. They are saying that according to them, the net profit was below their Goldman Sachs estimates, but there were some fairly interesting highlights. The sequential earnings growth was led by O2C, which is 17% up QOQ. Reliance Retail continued to gain market share with grocery revenue up 66% YOY. DMart was up just about, I think, 20 odd percent if I'm not wrong. So that is interesting. The capex has risen as well, but they are constructive on that. Morgan Stanley is constructive. They've mentioned how Reliance, for the first time, mentioned it plans to maintain the net debt to EBITDA below 1 despite upcoming investments. In a world like this, that is great news. So clearly, everybody is constructive on Reliance. Now, if you just look at the price performance of Reliance for the past few days, weeks, months, look at that. The price movement for Reliance relative to the Nifty. So 5-day period, they are both flat, right? So the trading perspective, immediate trade perspective, Reliance has not gone anywhere in the last 5 days, but it has gained about 4.5% in the last 1 month. So the month-long performance has been okay. Last 5 days in the run-up to the results, no movement. It has outperformed the Nifty in the last 1 month, yes. But look at YTD, look at 6 month period. Reliance has massively underperformed. So it's not a stock that has really gone great guns in the last few uh, months, and therefore that comfort is there too. It's not there been a very sharp run up in the Reliance price point already. Um, should there be one today? I don't know. There'll be a really sharp move or no, but are the results constructive? They certainly are, and that actually is a positive sign from a Reliance perspective. So that is the first stock on my radar. Okay, let me bring back the others. Then naturally, ICICI Bank fits into the bill. So the Q4 numbers, NII at 17,667 versus 12,605, PAT 9121 versus 7109, GNPA is improved, net NPA is improved, a bunch of highlights. NIM is at net interest margins are at all-time highs of 4.9%. It continues to outperform HDFC Bank for the fourth or the fifth quarter now. Highest ever quarterly return ratios with the ROA at 2.39% and ROE at 18.9%. So strong show by ICICI Bank too. The thing is, and I want to bring out that note, that view on ICICI Bank from one of the brokerages. Let me just pull it up for you. Give me a second. Yeah, so Goldman on ICICI Bank, they have a buy with the target price of 1100. They are saying that it's operationally in line. The market share gains are continuing with strong PPOP or ROA. But the point is, they believe the core PPOP growth could likely slow down in FY24 and 25 to be in line with other peer banks because of the reason, and that is one reason why they are taking ICICI Bank off the conviction list, even though they remain buyers on ICICI Bank. Now that is one Goldman view. Some of the others, of course, believe that there is uptick in deposit mobilization as a plus. They expect to continue to FY24. They have raised the estimate by 5 to 9%. This is Jeffries, by the way. Their target price is 1180. So you would have some with the lesser conviction, some with the higher conviction, but most people have conviction on ICICI Bank. And frankly, you just look at the reported numbers and the statistics. There's no reason to not be convinced. Just the fact that, yeah, are we looking at peaking out of margins in quarter 4, and therefore could there be a relative to the market estimates, a flattish performance from ICICI Bank could well happen, and that should be borne in mind. Then HDFC Bank, the other banking name, RBI has allowed HDFC Bank and HDFC Select regulatory relief to smooth out the merger between the two. RBI has also permits the bank to meet priority sector lending requirements in a staggered fashion over 3 years. So that is, well, I think they were kind of seeking extension and not regulatory relief. They've gotten that extension, and therefore that could be constructive. Of speaking to Radiant Capital, it's a broking firm in Mumbai, and they look at HDFC Bank very closely, and they were talking about this. So, well, I reckon that this is a positive and should augur well for HDFC Bank. Now, more than HDFC Bank, I think what the RBI has allowed HDFC Bank to do would be great for HDFC Life. Now, RBI has allowed HDFC Bank to also own 50% plus stake in their companies. So HDFC Life, for example, is one of them, and they've been allowed to do that. Now, why is this important? You'll ask, right? To my mind, HDFC Life could be the stock of the day today. The overhang of a possible 19% stake sale, or approximately 19% stake sale from HDFC and HDFC Bank now goes away. Uh, because I mean, HDFC Bank's stake in HDFC Life is about 48%. If the RBI had not allowed, and if they had to reduce the stake to 30%, that would have been an overhang of 18% or 18.5% or 19% stake sale. Now, instead of that, what is very clear that if they're allowed to keep 50% plus, they'll probably go to about 50%, right? You think logically. And therefore, instead of that overhang, there is now this tailwind that, hey, they might increase the stake by another 1.5%, and therefore that's a positive for HDFC Life. The other thing is, of course, HDFC Life becoming a subsidiary of HDFC Bank. So the share in the HDFC Bank channel, which is currently at 50%, will likely gradually improve. The cost of distribution in the HDFC Bank channel is likely to improve and aid margins. All of these are positives, and which is why I believe, to my mind, the stock of the day at the large cap end at least has to be HDFC Life. Watch out for that one. Wipro is going to consider a buyback of equity shares. Remember, IT index has done virtually nothing in the last 5 months. It may be a temporary move. What if the results are not great? It may die down. But I do think that this puts, I mean, IT managements for them, it's a bit of a floor that a buyback puts to their uh, stock prices, and they will do the same with Wipro. They're going to consider, we don't know the details as yet. All will come out on April 27th along with the numbers. So do watch out for Wipro. Then macro tech. I thought the numbers were a bit sticky. So sales were down, EBITDA margin lower, EBITDA down, net debt. All of these numbers were not that great. But net debt came off again, 7,117 crores versus 8,042. They've approved a bonus in the ratio of 1:1. And the guidance for FY24 is not weak, by the way. They're guided for pre-sales of 14,500 crores. They will continue to reduce below the ceiling of 1x net debt. They would generate about 6,000 crores of operating cash flow in FY24. So all of these things are positive things for macro tech, and therefore this should augur well, could augur well for the stock. Let me put it that. Will not say should. It means say could, because I mean, multiple things can happen. But yeah, I actually thought the guidance seemed to be pretty okay, and uh, that could be a positive for this stock. I'm just trying to see if I've missed out on a note with regards to macro tech. Yeah. So I think Jeffries came out with a note, right? Strong FY23, 20% growth guidance. So all of this, according to Jeffries, I think augurs well. Their price target is uh, 1325, which is about 46% higher than the current market price. I think they are waiting. Most brokerages will wait for the earnings call, analyst call before they give out their verdict on what their price targets, updated price targets would be. But seems to be that at least one of the brokerages who tracks it very closely is Constructive on Macrotech. So do watch out for that one. Tejas Networks, you would mix numbers, but I thought the revenue growth was solid, really. 136% uptick in revenue growth. EBITDA loss is narrowed, net loss is narrowed. You could argue that this could actually be construed as a positive. So do watch out for Tejas. Yes Bank, I was not completely sure, really. Mixed trends out there at best. So not a trend making performance, if you will. Maybe this could disappoint the street as well. So let's wait and watch. Kotak Bank, they've received the shareholder nod to appoint to their Kotak as a non-executive, non-independent director after his tenure as the CEO ends later this year. Now, I don't think there was any doubt with regards to this, that this would have happened. Just the point that because it has happened, maybe it is constructive for the stock price. Let's wait and watch. Again, a bank which has not gone anywhere the stock price in the last few months or quarters, if you will. So let's see. By the way, speaking of banks, it's a banking day today, isn't it? Bank of Maharashtra is going to be their board meet later today to consider a large fundraise. Watch out for that one. And there is a recommendation, trading recommendation on AU Small Finance Bank. Keep in mind the results coming today, but they MK Alternate saw this pattern in the stock, so therefore I thought I should bring to you. The price decreased by 1.8% on Friday. The OI increased by 5.7%. The traded volumes in the stock were 1.4 times the monthly average, with delivery volumes at 53%. The stock had risen by 17% from 12th April to 20th April, and versus a 1.71% rise seen in the bank Nifty. Being overbought, they believe momentum indicators indicate the reversal in the downward direction. They believe the stock can correct further by 3 to 5% before settling around its 20-day EMA of 624. Just keep in mind though, Q4 results come out and if the results are very good, you never know. But there's a story that my colleague Vishwanath did about the RBI apparently asking a small finance bank to slow down the growth. And that was the reason why the stock corrected 1.8% on Friday. Who knows, maybe there could be more in store. So be mindful of that. Maybe that's why I believe that. That's why I thought that I should get this MK Alternate review, because I believe that there is a bit of an overhang of that piece of news on a small finance bank. So be mindful of that. Okay, have I missed anything? I'm sure I have. I'm sure I have. But let me just try and see if I've missed something significant uh, in order to bring to your notice. So, yeah, I mean, spoken about Reliance, how O2C is coming back. Went India, by the way, I thought the numbers were good. Uh, the gross profit was okay. QOQ was up about 13-14%. Gross profit margins were strong. PAT 13 crores, up 20, PAT was up 27% QOQ, 71% YOY. So pretty solid numbers. Stand fact, pretty solid numbers. So those are a couple of them that you should be mindful of. Remember, it's a big day of results, big week of results for the US markets as well, with Coke, Alphabet, Microsoft, Meta, Amazon, all of them lined up this week. So pretty interesting set of numbers to watch out for the whole of this week. So do keep an eye out for each of these. By the way, yes, there's a Nomura note on Sun Pharma, which is a negative. They say the Mohali consent decree is a negative surprise as there will be a temporary disruption in supplies for Sun Pharma. So maybe that is something that you've got to be mindful of. Well, viewers, thanks for tuning into this very long trade setup today, but just a bunch of stocks to monitor, and therefore we thought it was important to bring all of those. A good day of conversations as well on BQ Prime, 10 a.m. Pratik Agarwal of Motilal Oswal. So that could be an interesting conversation to monitor. Some result conversations as well, and then through the week too, some very interesting market names that we will get to you. Thanks so much for tuning into the trade setup. Have a great day and a great weekend.